Flash PMI survey data for June signaled a slowing pace of economic growth, indicating that GDP is now growing at a sluggish quarterly rate of just over 0.1%. So the feel-good factor may be starting to elude the UK in the way that it's eluding those on the continent as well. Remember, we're 2 weeks away from the general election. Dan Hanson joins me now to give us some commentary on this from his point of view. What do you make of that?
It's pretty weak, isn't it?
Yeah, it feels like
we were expecting about a 53 number. Like, that was our expectation. So basically unchanged from where we were last month.
Services.
Yeah, and that is surprising. I mean, one thing, I'm just trying to get the press release up here myself, but one thing that's going to be really important for the Bank of England is what's going on output prices, whether we've got an easing of inflationary pressure there, because that's something they've been looking at. Yep. It's obviously a leading indicator, particularly they're so obsessed with services inflation at the moment. It's really key that eases as well. But just on a headline level, you're absolutely right, Guy. This is weaker than expected. And I think it plays to the story that the first quarter was a bit of an anomaly, if you like, that really strong first quarter GDP number. I think we're going to get a slowing through the rest of the year. And it might be in part due to the fact that there was so much exuberance at the start of the year about rate cuts. And now people have sort of had a bit of a reality check about how far interest rates are actually going to come down. Is
this temporary? So it's interesting. Chris Williamson talks about the slowdown in part reflects uncertainty around the business environment in the lead up to the general election, with many firms seeing a hiatus in decision-making pending clarity on various parties. So is this a temporary blip, do you think?
It's interesting, isn't it? Because it just feels so certain about what the outcome of the election is going to be.
That's the weird thing.
That's strange.
But what we don't have is certainty on the policies.
No,
maybe that's where the...
I think that, yeah, and it's possible. You know, Labour, for example, we've been thinking through the idea where Labour come in and they're a little bit... they're a little bit bolder, if you like. They've got a very modest manifesto. We know that. Very small spending and tax numbers. But perhaps they come in and they're a little bit bolder. So it's... And obviously these manifestos, they don't have huge amounts of detail in. So I think it could be, as you say, there could be a bit of temporary nature to this. But it's interesting because it does feel like of all the elections we've had, at least recently, the outcome of this one is much more certain.
In short, while a slowdown in economic growth may prove temporary, should businesses react positively to the policies announced by a new government, the stubbornness of the underlying inflationary pressures above the Bank of England's target still looks somewhat ingrained. Which is so. Let's turn to that last bit. Inflation being ingrained. In terms of what you see in terms of the prices on inflation, prices charged inflation across the private sector consequently rose to a 4-month high in June. Does that put your August rate cut in doubt in any way, do you think?
Well, let's see the CPI data.
OK.
I think reading the minutes yesterday, and we spoke about this earlier, that they feel it looks to me like they're really keen to cut.
Yeah, it does feel like it.
You know, they essentially dismissed some pretty big upside surprises in the services CPI data. At least a majority of them seem to be close to dismissing it. I think if we get the services CPI data, it's July the 17th, I think. If that's broadly sort of continuing to track down, I think we're on. I think the broader story, though, and it kind of goes against what we're seeing here in the PMI, is that the economy is doing better than almost everyone thought at the start of the year. The recovery has been stronger. And I think the underlying inflationary pressure is probably the momentum there is probably a little bit stronger than people expected. And that means, yeah, OK, you do August, but after that, you've got to be pretty cautious about how quickly you let your foot off the brake.